Hi, I'm Anna Lee. In this video, we will talk about financial reporting standards. Let's look at the need to develop standards. Various users have various needs for financial information. The accounting profession has attempted to develop a single set of standards. That's what we call the Generally Accepted Accounting Principles, short for GAAP, GAAP. GAAP provides guidance for preparing financial statements. Let's take a look at financial accounting and reporting. First, we got to know what accounting is. Accounting is a business entity identifies, measures, and communicates business-related financial information to balance sheet, income statement, statement of cash flows, statement of owners or stockholders' equity. There are additional information that's relevant to financial statements. Those information include President's letter, news releases, reports filed with governmental agencies such as SEC, forecasts, and the prospectus. When the company become a public company for first time, it will have to use prospectus. Let's look at objective of financial reporting. There are two objectives. First one is provide useful financial reporting information to present and potential users. Those users include equity investors, lenders, and other creditors in making decisions as capital providers. The next objective is to provide the most useful information possible at the least cost. In other words, you have to be cost effective. Let's talk about history and hierarchy of standard setting authority. We all know Congress. Congress started the Securities Exchange Commission. We call that SEC. SEC partners with private sector to establish accounting principles. In 1938 to 1959, there's an organization called CAP, CAP, stands for Committee on Accounting Procedure. It is a committee established by AICPA, American Institute of Certified Public Accountants. They issued 51 accounting research bulletins, used problem-by-problem solving approach. That approach not always solve issues. Therefore, in 1959, AICPA established Accounting Principles Board. It had 18 part-time volunteer members. They issued 31 Accounting Principle Board opinions. That organization lasted to 1973. They received many criticisms by government and public. Therefore, in 1973, FASB was established. FASB has 7 full-time members. It's supported by its parent, Financial Accounting Foundation, FAF. FASB works with the Financial Accounting Standards Advisory Council, who consults with FASB on major policy and the technical issues. They also select task force members. Task forces assist FASB on reporting issues by doing research analysis and writing functions. Let's look at the parties involved in standard setting. First one is SEC. SEC regulates accounting and reporting for public companies. SEC administers the Securities Exchange Act of 1934. SEC has mandate, that is to establish accounting principles. The private sector must listen to the views of SEC. SEC has enforcement authority. If a publicly held company is being suspected having accounting irregularity, SEC will issue or send a letter of deficiency. The company is asked to fix those issues. If the company does not fix the issue from that deficiency letter, then SEC can issue a stop order. That stop order will stop this company from trading its stocks in stocks exchange. If that doesn't work, SEC can take legal action. Second party involved in standard setting is AICPA. AICPA is a national professional organization. AICPA established 2 organizations, as I mentioned earlier. One is CAP, Committee on Accounting Procedures. The other one is Accounting Principles Board, APB. Third party involved in standard setting is Financial Accounting Standards Board. That's FASB. Financial Accounting Foundation is FASB's parent. Financial Accounting Foundation selects members of the FASB. It funds their activities. It also exercises general oversight. FASB itself has a mission to establish and improve standards of financial accounting and reporting. Financial Accounting Standards Advisory Council consult on major policy issues. Now, keep in mind, GAAP is a product of political action. GAAP is also a product of careful logic or empirical findings. Let's look at the due process system of the FASB. FASB cannot issue a standard unless it goes through the next 5 steps. First, FASB has to have an agenda. That agenda would identify the topics FASB is going to talk about. Once the agenda is prepared, then the research and analysis has to be conducted and the preliminary views of pros and the cons has to be issued. Once preliminary views are issued, then there will be a public hearing on proposed standard. Once the public hearing is complete, then the board will evaluate research and the public response and issues exposure draft. Once the exposure draft is done, FASB evaluates responses and changes exposure draft if necessary. After all that is done, FASB issues a final standard. Let's look at the FASB itself. There are 3 types of pronouncements. First type include standards, interpretations, and staff positions. All 3 has the same authority. Second type is financial accounting concepts. Financial accounting concepts is part of conceptual framework. It serves as tools for solving existing and emerging problems. Third type is emerging issues task force statements. Primarily address implementation issues with GAAP. Changing role of AICPA. In 1973, the AICPA established the Accounting Standards Executive Committee when it replaced the APB. The committee spoke for AICPA use the following communications method. First, they publish audit and accounting guides, provide specific guidance on matters not addressed by the FASB for specific industries such as airlines, universities, and banks. AICPA also issued Statements of Position, short for SOP. It provides guidance on financial reporting topics until the FASB sets standards on those topics. AICPA also issued practice bulletins. AICPA and the Accounting Standards Executive Committee no longer issues authoritative accounting guidance for public companies. Let's take a good look at the FASB codification. For several years, the FASB had a goal in developing the codification to place all the authoritative literature in one place. The code also includes SEC accounting guidance that are relevant to financial reports filed with SEC. FASB codification creates one level of GAAP, which is considered authoritative. All other accounting literature is considered non-authoritative. What do you do if you don't find a FASB code? If the FASB code does not cover a certain type of transaction or event, other accounting literature may be considered. You may use FASB concept statements, international financial accounting standards, and other professional literature, such as article you found from one of the Big 4 accounting firms, FASB codification framework. On the screen, you can see the FASB codification framework. First, you have a topic. This example says 310. That represents receivables. Next level covers a subtopic. The example says 10 stands for overall. 40 talks about troubled debt restructurings by creditors. The third level is sections level. Our example here, number 30, stands for initial measurement. Number 35 explains subsequent measurement. Number 47 is the fourth level, that's paragraphs. So you will read this screen as 310-10-35-47 for loans and trade receivables not held for sale. That 47 is the paragraph, the last part of this structure. FASB codification structure can be thought of as one big drop-down menu. The diagram you just saw looks like a drop-down menu. The menu logically leads you to the information you are seeking for. The structure also provides a hierarchy method for assigning reference code numbers. For instance, 740-10-25 talks about corporate income taxes. Either use asset or liability approach. Everybody listen very carefully. The codification does not change GAAP. Instead, it recognizes the thousands of GAAP pronouncements into roughly 9 main topics and 90 subtopics, and displays all topics using a consistent structure. Another example for FASB code, 605-25-25. It represents the topic number 605. That's revenue recognition. The first 25 is subtopic, talks about the multiple element arrangements, and the second 25 talks about revenue recognition. This applies to software company revenue recognition. When FASB issues a new standard, it is called an Accounting Standards Update, ASU, and becomes authoritative when it is entered into codification. Let's look at how important FASB codification is. FASB codification becomes a key component for financial accounting research. For the CPA exam, beginning 2011, it is required for you to pass CPA exam. As a practicing accountant, codification is a new user's manual for the rest of your professional life. Learn it well because you will be using it. How to use the online research tool. This is an important part for anyone who wants to look up a particular code or a particular subject. When using the online FASB ASC tool, you can research information 4 different ways. First method is to browse by topic. You simply click through the menu hierarchy to reach the desired entry. Second way is to search by keyword. That is very similar to typical online search engine functions. Third way is to research by FASB Accounting Standards Code reference number. If you know the number already, you simply put it on the left upper hand corner. There's a little box. You type in that number with a hyphen in the code. That will lead you directly to the topic you're looking for. The fourth way is cross-reference by the historical GAAP designation. That means you use old GAAP name. Let's look at international accounting standards. There are 2 sets of standards accepted for international use. First is US GAAP, issued by the FASB. Second one is International Financial Recording Standards, short for IFRS. Issued by the International Accounting Standards Board. FASB and the International Accounting Standards Board both recognize that global markets will be best served if only one set of GAAP is used. In other words, the business world would be better if it's only one set of GAAP. Let's compare GAAP with IFRS. Now, IFRS is simpler. It's viewed as principles-based. GAAP is more detailed. People think it as rules-based. SEC allows foreign companies that trade shares in U.S. markets to file their IFRS financial statements without reconciliation to GAAP.